Uh, Good afternoon. This is the part two of my mortgage underwriting basics. Uh, the question I'd already explained, a mortgage underwriter's compensation and why it's such a lucrative job and why people are running into this industry. I talked about the earnings, the income, the salaries, and of course also the requirements. But now I'm going to discuss what happens when a mortgage goes to underwriting. Because underwriting simply means that your lender verifies income, assets, debt, and property details. And after reviewing that, they can issue final approvals for the loan. More specifically, underwriting means evaluating credit history, assets, size of the loan, and are you able to pay it back? So when a mortgage application goes to underwriting, it enters a critical stage of the loan approval process. Here's what typically happens during underwriting. Verification of information. The underwriter carefully reviews all the documentation provided by the borrower, including income verification such as the pay stubs, tax returns, W forms. Underwriter also reviews assets such as bank statements, investment accounts, and so on and so forth. And also details of the property being purchased, such as the appraisal report and, of course, title documents. After reviewing the information, now you evaluate the credit. The underwriter assesses the borrower's credit history to determine their credit worthiness. This involves reviewing the borrower's credit report, credit score, and payment history on existing debt. So once you've reviewed information, reviewed credit, then risk assessment. The underwriter evaluates the overall risk associated with the loan. This includes considering factors such as the size of the loan, the borrower's debt to income ratio, the loan to value ratio, and any potential risk related to the property or the borrower's financial situation. After reviewing the information, credit information, risk assessment, the underwriter now ensures the loan application complies with all applicable lending guidelines and regulations, including those set by the government agencies such as FHA and VA or Fannie Mae and Freddie Mac guidelines. And of course, some companies have their own internal policies which the underwriter needs to be aware of. After reviewing information, verification of information, credit, risk assessment, compliance review, the underwriter has to look at any discrepancy. If the underwriter identifies any discrepancies or missing information during the review process, they may request additional documentation, and this will come from the borrower or other parties involved in the transaction. The underwriter will have to look at this very carefully to clarify or verify certain details. Once you've done that decision making based on their evaluation of the borrower's financial profile, credit worthiness, and the overall risk of the loan, the underwriter ultimately decides whether to approve, deny, or suspend the loan application. If approved, the underwriter may specify any conditions or stipulations that must be met before the loan can proceed to closing. So the underwriter or the underwriting process plays a crucial role in determining whether a borrower qualifies for a mortgage or a borrower qualifies for a loan, and the underwriter ensures that the lender makes informed decisions based on a thorough assessment of the borrower's financial situation and the risk associated with the loan. So that's what happens when the loan application is taken and then it goes into underwriting. So once it goes into underwriting, what are the duties of the underwriter at that point? Like I said before, a mortgage underwriter's responsibilities are reviewing and verifying loan applications and also reviewing and verifying supporting documentation, analyzing loan risk, and requesting additional information as necessary. And then also underwriters have to prepare reports on assessment findings and making loan eligibility decisions and approving or rejecting applications. So, indeed, reviewing the loan application process, mortgage underwriters thoroughly examine the loan application submitted by borrowers, along with the supporting documentation. This documentation typically includes income documentation. Then, like I said before, analyzing the loan risk. So underwriters assess the risk associated with each loan because no two loans are going to be the same. So the underwriters evaluate factors, especially credit history, debt to income ratio, loan to value, sometimes LTV or DTI ratios, and the overall financial stability of the borrower. That is key. Is he able to pay back the loan based on the analysis? So underwriters determine the likelihood of the borrowers repaying the loan as agreed. If underwriter believes the borrower is not able to repay the loan, chances are he will decline the loan or suspend the loan, looking for more information. If the underwriter identifies discrepancies or gaps in the documentation, they may request additional information or clarification from the borrower. The underwriter ensures that they have a complete understanding of the borrower's financial situation, and from that information, they can make an informed decision. So, preparing assessment reports. Underwriters document their findings. Whatever they see on the loan, they have to be documented. And an assessment of each loan application is detailed differently. Or each loan application has to be detailed effectively. So these reporting summaries and helps the underwriter summarize the borrower's financial profile. This will help the underwriter summarize the borrower's creditworthiness. And also the underwriter will summarize the risk associated with the loan. Underwriters may also outline any conditions or stipulations that must be met for the loan approval. What I mean by that is, if this is not done, the loan cannot be approved. So you may meet every other condition or stipulation, but one that must be met. If it's not met, the loan cannot be approved. So learning how to make these decisions is what underwriting is. So making eligible decisions based on the review and analysis, underwriters make decisions regarding the eligibility of the loan application. So underwriters determine whether to approve, deny, or suspend this particular loan application, taking into account factors such as the borrower's creditworthiness, financial stability, and compliance with lending guidelines. So it's a whole thing that Just because you're an expert at reviewing credit does not make you an expert at reviewing assets. So you have to know how to do all. So once you figure this out, down reports, now you have to communicate your decisions that you made. You have to you must communicate the decisions to the loan officers. You have to make the decision to the borrowers and explain to them why. And any other person involved in the loan process. So underwriters provide explanation for their decision and why they may offer guidelines on steps that the borrowers can take to improve their eligibility or address any issues identified during the process. So, as you can see, it covers a lot and it requires some training. So you just can't jump into it. So underwriting plays a crucial role in the loan process. And of course, being careful while assessing financial viability and risk associated with each loan application, and ensuring compliance with lending guidelines and regulations. So the attention to detail, analytical skills, and ability to make informed decisions are essential for maintaining the integrity and stability of a mortgage lending industry. So as you can see, it's a great opportunity for those who have thought of getting into the mortgage industry. The demand is high for mortgage underwriters. This is the time to get that training. If you do need any more information about the training, please reach out to me and I will lead you in the correct direction and provide you with all the necessary information. Thank you, and see you again next time. And again, I just want to say thank you for listening to me, and I'll put my contacts down right here below. Thank you.